We have all been there. We are excited about some sort of purchase. It could be a car, it could be a house, could be a motorcycle, it could be just a really fancy doodad. But you know, in the RV industry, we see it all the time. You're excited about that perfect RV, the one that's going to get you those places, and then you got to talk numbers with someone. And
not just any numbers.
The
Finance numbers.
Finance numbers. My eyes glaze over. My world closes in. My ears get all stuffy. It's a problem because numbers and finance and banking is all mystifying to me.
Well, let's talk about the unfun part of buying fun things.
But let's make it fun.
Okay.
That is
let's
the fun part. To me, it's the fun part.
There it is.
we have a nerd with us where it is the fun part. We probably have a couple of nerds with me today.
Okay.
I love them dearly, by the way. But let's see if we can make sense of this.
All right. Well, welcome to the RV Small Talk podcast, where we talk about lightweight trailers, truck campers, and the people, places, and adventures that go right along with them. We're your hosts from Princess Craft RV. I am Clint.
I'm PJ.
And I'm Teri.
Which is not Lindsay.
No.
But you're going to fill in and you're going to do great. I think we've got you a little caffeinated.
Yep.
At a small level, so this should be good. Everybody, we do have a special guest today filling in for Lindsay, and she is our ringer when it comes to banking and finance information. This is Teri, but there's a history here. Who's going to bring this history up?
Should we just start there?
Yeah, let's start with the history while I drink my non-branded, nondescript coffee. You're going to have to see it on the video. If you're listening on a podcast, go to the video. All right.
Nothing about branding here, right?
Nice.
Well, I think what you're trying to say is that Teri and I are, in my estimation, besties.
Best friends.
Oh, this isn't a strictly professional?
Yeah. And so, you know, we also, if you're listening to recent podcast, those two, then we are always saying, hey, Caitlin, because she is kind of our researcher in the background.
Let me try it real quick. Hey, Caitlin.
Hey, Caitlin.
Hey.
So through a strange twist of probably manipulated events, we are thrilled to have Teri as, gosh, one of my favorite people in the world, and her daughter, Caitlin, helping us in marketing. So I don't know. When they say we're one big happy family, Clint, I mean, I think that's really true. You and I are not related.
Yeah.
But
I mean, go far enough back.
I mean, after 12 or 15 years, nobody counts, right?
Right.
Then you're pretty much
in.
Is it kind of like being married where you start to look alike and act alike, even if
we're
not
totally
related?
just two of a kind.
Because look at us. We look alike.
We do look alike.
true.
Everyone always thinks we're
That's
sisters.
always
Yes,
true.
but we have
Every
always
photo.
looked alike.
Yeah.
It's the craziest thing.
But how did you two meet?
Well, she was never my bank rep. You were never my bank rep.
Well, not technically,
No.
but I was.
But were you like on the game shows? You're like, you have a lifeline. Would you like to phone a friend for the real information? Is that kind of how it went?
That's how I feel about myself.
Okay.
Yeah.
So, yeah, in our industry, we have reps for each of the different banks we work for with, and that help fund our customers. And Teri was with one of those banks.
And I've been in banking for almost 40 years. So way before internet, way before bureau scores, you know, back when we would just look at the person, ask you, what did you think about them? Well, they seem pretty legit.
Yeah.
Coming till now when it's almost all automated. And that's what's made it really confusing to customers. And you're right. They're buying an RV. It's fun. I love it. It's fun. And now all of a sudden you go into finance and you're scared because they're asking your social and your, you know, how long you worked here. And well, back in 2020, we see this happen and you don't know.
Right.
So it's just a big, uncomfortable world for people.
Yeah. So you're telling me when you started in banking, there was no credit scores?
No credit scores. There was not even credit bureaus that you could pull. You would call the credit bureau. So you would call them and say, you know, PJ Berger's here. Here's her social. They would tell you what was on their bureau and you would just write it down.
Really?
Very secure. I like it.
Yeah. But yeah, nothing like protecting all of your information, right? I don't think we'd even thought of that back then.
And as a bank,
I know I wasn't thinking about it. I was 2.
Well, I know my credit card statements, probably them too, but my bank statements came with, the full account number on them. Everything had full account numbers on them.
Wow.
Everything you did had your social on it.
Credit card fraud was so easy
right
back
there.
then.
It was printed on everything.
Yeah.
It was just part of who you were.
Yeah.
It's crazy.
So,
Okay.
So are you saying, would you say people, the experience of dealing with financing felt better than it feels now because it was more personal, is more relational?
I feel, because I am a person that needs to see you face to face. I need to watch your eyes as I'm talking to you.
Oh, if I get skittery with my eyes, you keep looking up and to the left.
And it was much more relational, but you also knew, okay, you know what? I know your dad. So if you don't make your payment,
You know
I'm
my
going to call
dad.
your dad.
Oh.
And, it was more of that. There was more of
Yeah.
a family relationship.
A little bit more small town kind of.
I remember when you walked into the bank, you knew your loan officer. He'd been there for 40 years. And you sat down and said, hey, I kind of want to buy a car. And he'd say, oh, okay. Well, what are you thinking about? Well, I'm thinking I'm going to go buy this, Ford Pinto. And he says, okay, hopefully he'd say bad choice, but he might just say, okay, well, let me know, have him give me a call. And it was that easy. Didn't
the Ford Pinto have like a gas tank issue or like turn into a fireball?
Yeah, and didn't my family drive one for like 40 years?
Oh my gosh. I'm sorry, off topic.
Yeah, it's definitely a history with my family. A lot of great stories, actually. But at any rate, it was so easy, and it was relationship building, right? But the other thing about how things have changed is we didn't buy as much stuff, and the world didn't go as fast. We did not expect answers in an hour.
Right.
Nothing happened in an hour.
Yeah.
Right?
And you think of back then as a bank, even a national bank, you could maybe look at 20 or 30 deals in a day because you're having to do it manually. Now it's all computerized, so you can look at 200 in a day.
Right.
So you had to keep up with that pace because if you're not the first bank that answers, they're going to another bank.
Right.
So it became just the competitive nature of I've got to be the first person that answers. You don't necessarily even have to be the best rate or the best terms, but you have to be the first one.
Who gets them the keys the fastest?
Yeah.
Is it still like that?
Yeah.
Maybe more so.
But then it makes it a little trickier because as a customer now we talk about FICO score. Make sure you're a 720, and that's not necessarily all of the picture because we need to also know how long have you lived at your house? How long have you had this job? What did you do before? There's a lot more that figures into it, but all you see on commercials all the time, all you see on different commercials with RV and auto is, what's your FICO score?
Right. The small print, the stuff they say really fast.
Yeah. So your FICO score is very important, but so are, other areas. How much money are you going to put down? What is your overall debt? What is this payment going to do to your debt?
This sounds
I'm
really
getting anxious just hearing this.
So,
I'm getting so happy.
Yeah, because this is my area. So you've been around the RV industry enough to kind of get a sense of the RV dealership, the finance officer, representative side, but also you got a sense of the customer. What is we see the excitement kind of get like a wet blanket thrown on it once it moves to that part. What's the problem there? What are people experiencing?
And you know what? I have it when I am in financing something else too. You're just not used to it. So you don't know what questions are going to come up. You don't really know how to answer the question.
And why do you need to know that? Why is that even coming up? It's not your business.
Well, Is this kind of like, when you get pulled over when you're driving somewhere and you're like, okay, well, I wasn't speeding and my driver's license is current. Everything's good. I'm insured and I'm nervous as hell because I don't know. What are they going to ask me? Is there something I don't know? Oh, wait, do I have a knife under my seat from when I peeled that grapefruit? Yeah. I don't know. What did I do wrong? You just get so nervous.
Yes.
And you no reason really. And they come up and say, ma'am, I wanted to let you know your taillight is out. And you're like, oh, okay. Yeah. And you're still like, all right, well, just let me leave because you're nervous about things that maybe you're not thinking about or you don't know about or a question you don't expect.
Yeah.
I mean, is it an unfounded fear or anxiety is probably a better word, when you actually get to that situation where you're like, okay, I have to fill out a credit app? Oof.
Well, I think there's some other things that kind of go through me, maybe more, but I'm kind of weird. So it's a little adversarial. You've already discussed price and all that, but it feels a little adversarial because there's because you're already going to finance and it feels like there's some gamemanship going on. It feels a little bit like smoke and mirrors, and they're trying to get a little bit more out of you because it sells and all that. And I have to keep in mind that, I'm trading them my commodity of money, maybe over time, for keys to the thing that I actually want. But but in that small office or whatever, I lose sight of that. It just feels like a lot of money and numbers and
a lot of pressure.
Numbers moving quickly. And I don't want to appear stupid, but I don't do this every day like the finance person.
And you're under the microscope.
Absolutely. And they're asking questions that culturally we're not very comfortable answering.
Right.
So tell me about your income. Tell me about your other assets and all. Other cultures, that's the opening question. But in the Western culture, not so much.
And it's also okay because you're already a little bit uneasy to say, not questioning why you're asking me, but why is that? Why is that relevant? Why do you need to know that? You can ask that. You can for sure say, that's a weird question. I've never even thought of it.
Are there some weird questions?
There's some weird questions.
Ooh, what are the weird questions?
There could be, just asking you, we saw on your credit report. Now, we just assume that you as a customer look at your credit report all the time. We're looking at it now and saying, back in in 2012, you did this. And you're like, I don't
even remember that.
So it's a lot of that. And it's perfectly fine to say, I don't remember or I don't know to answer to the questions. You don't want to just.
It doesn't feel fine to say that, though. It feels irresponsible. Like I feel like across the table, I feel like they're like catching me on all my lack of paying attention and staying on top of things. Like I should walk in with.
Well, and the hard part too about RV financing, auto financing, you get everyone. Everyone needs a car. We know you're going to drive it every single day. We know you're going to park it at your house.
It's not a luxury item so much most of the time.
But an RV is different because you're going to be going all around the country. We don't know where you're going to be. We don't know how to get in touch with you. You're not going, or you might store it for 6 months. So there's a lot of questions just to make sure that you know. Okay.
But usually the bank doesn't ask those questions. Usually it just gets turned in on a piece of paper for the customer, right? Am I missing something?
I think they're asking a lot of questions. I think that they are.
The bank is.
Yeah, I think the bank is. And
does the bank call the customer?
No, the bank, because the way indirect finance works, you're my customer. You're the dealer. You're my customer. You're lending me your retail customer. So that customer that you have is, yes, our customer eventually, but even when they're on the books with us, we still consider them to be your customer that you're lending to us. So when I'm looking to see, is my program good? How are things going? I'm going to you as the dealer. And then you go to the customer at that point.
So the business manager who's doing the paperwork and the loan paperwork with you might ask you these questions.
Right.
That might be uncomfortable.
Right.
A lot of times we have to ask the customer, do you have a pay stub for that? Do you have a pay stub from 2 years ago? Can you verify this? Do you have a utility bill? All these odd things. I think that makes a customer uncomfortable too.
And that's even uncomfortable for the bank to ask when we're having to ask for more and more documentation. But you just have to realize that an RV customer on pretty much on the whole is a higher credit score. I mean, it's a customer that can afford a car, a house, and now a specialty item, an RV. So we're just trying to make sure that there's enough money, not just to support the RV, but where are you going to store it? You know, you're going to have the storage. So we want to make sure that there's a lot of income to cover it. And there's also a lot of times that people don't just get the same income, you know, same paycheck every month.
Yeah.
You know, you have bonuses, you have overtime, you have commissions. So the bank has to figure out, is this standard? You get it every year. This is, you know, overtime is just, you're always going to have the overtime, because what happens if next month overtime's cut? Well, now that $200 or $300 or $400 you were going to pay on your RV is gone because you were using your overtime money for that. So we just have to make sure. And honestly, the banks get looked at by many different federal agencies to make sure that we are lending to the right people, that we're not overburdening people like you saw back in the 80s. We don't ever want to get in that position again. So it's a lot more information than you need when you're buying an auto. But it's just so that we can make sure that there's income for it, that you even realize.
Yeah, buying an RV is different than buying a car. You know, so many people walk in and they say, oh man, yeah, I just bought a truck. I just walked in and I had a loan. I was out of there in 3 hours. It was awesome.
Yeah.
And my interest rate was 0.9.
And that's experience people want.
0.9, yeah. And so now, I know I can buy an RV because I just bought a car. What's the difference in buying an RV and buying a car from the bank's point of view?
That's a good question. And
Good job.
I know I got a good question.
And it's hard for a customer because you just bought a $80,000 truck.
Right.
Your interest rate was 0.9. Now you're just looking at a $60,000 trailer. What's not that big a deal? I just got a $90,000. Okay, as a bank, we're saying, wait a minute. You just financed 90 grand. Now you're going to have an RV payment on top of that. And as a bank, we look at the car. Like I said, you're going back and forth to work every single day. This RV, you could be parking it in Montana. You could be parking it in Alaska. You could be parking it at a storage facility. And if
Or
you just
Cracker Barrel.
or Cracker Barrel, and
You could be living in it.
you could be living in it.
Which is a whole nother question.
Okay, save that one.
We'll get
That's
that.
another
I'll save
good
that
one.
We'll get that one. So it's just that we have to really know, and you're not going to get the same rate.
Why not?
And people ask that all
Why
the time.
not?
Is that why? Because it is a specialty item. It is not an item you're going to use every day. It's not an item that's probably going to be at your house. So it's going to be stored somewhere. So we're having to trust that it's stored, you know, under cover. Whether you're up north and it's the cold, or you're in Texas and it's the heat, it's got to be protected. So we're looking to make sure if we finance you for 20 years that we know you're not going to keep it that long, but if you did, that it's not going to depreciate just from being out in the weather. And just,
It is. Of course they are.
Yeah. And just driving it and just camping, just the whole, how it's going to be used, it's going to rapidly depreciate, possibly. So the bank just has to make
You're really
sure.
not helping our sales here. You're really not helping our sales pitch here.
You're gonna rapidly appreciate how much fun you're having in your RV.
You know, we do always tell people, yeah, our podcast isn't to sell trailers. So I think we have definitely put a nail in that one.
Well, and it's just the bank wants to be protected.
Oh, yeah.
And it's
Sure.
At that point, we're just giving the money. So we just want to know that you can afford it and that we're not going to take it back.
So I guess that leads me to the next question, because I always love the stats. So is there more foreclosures on RVs than there are on cars?
No.
No? Then why are the rates higher?
The reason, okay, there's several reasons. A car,
I think that's another good question, PJ.
that is a very good question. I'm just getting a little sweaty here.
Good. It's good.
Here, I'll be a fan.
I know. Everyone,
Don't be weird though.
Too late.
everyone needs a car. And, well, especially in the South, we don't have public transportation.
North people don't need cars.
Maybe not as much.
All right.
We know it's going to be a shorter term. It's going to be 4, 5, or 6 years. We know that you're probably going to stay in this small little area. And we know it's the loan's going to roll and roll and roll. So we know that if you went to this bank for this car, you're probably going to want to go to the bank again, that same bank.
Maybe.
Yeah, maybe not. with an RV, there's so many unknowns. We don't know where it's going to be. It's usually a 10 or 20 year loan, which is more risk to the bank. So,
right.
and even though it is a higher FICO scored customer as a whole, if something goes south and you have to get rid of something, you're going to get rid of boats, RVs, motorcycles. Right. You're not going to get rid of your car. So there's much less risk in a car loan. Even if you have a lower FICO score, it's less risk to the bank because you need that to keep your income coming. Mm-hmm. And in an RV, you don't. And when you ask about delinquencies, usually the only reason why you'll have, or majority of RVs that we take back as a repossession, someone couldn't afford it, is because someone died. It's a couple, and one of the two died. Otherwise, that
with a car, you just sell it. With RVs, they just let it go.
Yeah, they just let it go.
Yeah. Back in 2008, 2009, when everything crashed and it was horrible for banks, for dealers, for customers, all of us kind of had a terrible time. Mm-hmm. Did you see repoed RVs just pile up?
Oh, yes. It was very difficult back then. And one of the things that all the banks took a good look at is, how are our lending policies? What do we need to look at? Is there more than just the FICO score that you want to look at? And we changed a lot of things. And when you're buying an RV, you're going to be asked for a down payment. A lot of times you can buy a car with not a down payment. Sometimes you go to the RV shows and they'll waive your down payment. But that's one of the things that the bank really looks at. And honestly, the more money you put down, the better rate you're going to get, because now the bank's saying, okay, well, you really want this. You've put some hard-earned money in it and you'll get a better rate. So
yeah, the rate tiers that I've been seeing, it used to be for a while after the 2008, 2009 crazy, you had to put money down.
Right.
But the banks have loosened up now.
Right.
And you can get zero down loans, but it raises your interest.
Right.
So I guess because there's more risk there for the bank. So it costs more if you don't put any money down.
Yeah.
And a lot of people don't realize that.
And even if if you put $2,000 or $3,000 down, you don't have to put 10,000 down. If you put money down, it does. It'll help your rate.
And it's funny, I know the banks, they really are just numbers oriented. They're just saying the numbers bear this out. Right. But to me, the numbers are bearing out something that's psychological, whereas you're saying in the 90s, 80s, 90s, or whatever, is a little bit more personal. And you're like, I know you, I'm looking you in the eyes. I got a sense. I know who you run with. I know more, and it's more small town. And I got a feeling the numbers have really kind of bared this out a little bit to where you're saying, well, the bank is looking at how big your down payment is.
Right.
So is it
to assess the psychology of you're really invested in this,
right? But is it like life insurance where they have actuary tables where they say the percentage of, you dying at this age with this, history is this percentage. And if you put a little more down, then you're, going to be in a different matrix. Is it that scientific, or do they just kind of say, hey, we'll give you a break if you invest a little bit more in your RV?
It is that scientific. I mean, to the point of we can look at rates. If the rate goes down 0.1%, if it goes from 699 to 689, we know that bam, we're going to get a lot more business. We're going to have a lot more people coming to us. And you think, well, how does 10 basis points make a big difference? But it's that easy to calculate it. And we can look at,
all the data coming in, and
we look at it in so many different ways. And I'll just say too, as a bank, and I was just the numbers person, is you pull what numbers that you need. And that's why sometimes you'll find someone up in the north that got a certain buy rate, and then someone in the south that gets a different buy rate or rate on their loan, is just because it's different culture, I guess you would say. I can tell you,
for some reason, the numbers are different there than they are
in the South. We know people are going to have a lot of credit card debt. And instead of us saying...
Really? More than the North?
Definitely. In the Midwest, there's hardly any credit card debt. So you would think, how can you stereotype it?
It's there's a culture there. The farmers are like, no, we pay cash and we pay it out. It's old.
But they
school.
also, farmers run on a line of credit.
They do. It's like
Right.
it's a different place of credit.
But we also look at it differently.
Yeah.
Just knowing in Texas, highest credit card debt of all the states.
Really?
But then we can pull back and say, but the delinquencies are good. So they're paying their bills. We just
carry more debt.
You just carry more debt. And so instead of just being one blanket bank saying, no, if you have this much debt, we're not going to do it. We know in different areas it's different
It's
amounts.
not just the amount that's carried. It's how reliable you are paying. And I think it's probably because of our hot summers. We're all putting our air conditioner bill on our credit card.
We are?
Yeah.
Well, I tell you we all worry about, oh my gosh, people are going to get my personal information. I mean, the statistics of everything in our life is out there. I had no idea. And I've been doing this a long time. I'm pretty savvy about how the banks work. I had no idea that even regionally they can say in this area, okay, the rates need to be adjusted a little bit. We're going to bump you this way, bump you that way. So, wow. And we're just looking at the data for that state. Now, where it makes it a little more tricky with RVs is you have a lot of out-of-state buyers.
Sure you do.
So now you can't tell.
So now you're confusing our whole algorithm. How many customers did you have that were out of state, which we look at that too. So there's just so much information that you can get and that you can dissect. And it's really trying to make it where the strongest customers get the best rates. They can get the best deals.
Right.
Where we have the least amount of risk.
Now, you said something earlier before we even started recording is you were kind of saying that people don't quite understand, and in the moment, I certainly don't understand, that the person asking the question isn't necessarily the person sitting in front of you.
Yes.
So what did you kind of mean in that line of speaking?
Well, because the bank has a list of questions that they'll ask, and it could be, just so many different things that is uncomfortable. It's not uncomfortable for me because I do it every day. It's uncomfortable for you to ask someone because you don't necessarily get that question every day. And a lot of times the customer will say, why do you need to know that? Why is that? Why do you need my divorce decree?
Right.
Which rarely happens, but it could happen if you have a lot of joint credit.
It has definitely happened with us because they're like, yeah, we got divorced and I got this, but our name's on it, but here's my divorce decree. And I'm like, not quite enough.
Right.
But
and it's not, and you were kind of saying it's not necessarily the person who's doing the finance paperwork with you in person. It's they're kind of the mouthpiece for the person who really needs to know the details.
Right.
At the bank, not in the same city.
And,
And
there's a lot of times where the bank will say, okay, he wants a $60,000 loan. If you went to a $59,000 loan, we can get you a better rate. That's hard to explain to a customer that if you just put $1,000 down, I can lower your rate this amount. And it's just, again, the algorithms, it's all computerized now. So we can see if the customer wants to put this much money down, this is his rate. If he wants to do this, this is his rate. So it's just, it's not necessarily trying to get more information of you. It's trying to, how can we get the strongest customers? How can we structure the deal where we feel, and it could sometimes be an amount that's that small. That's hard to explain to a customer.
Yeah, because $1,000 really doesn't make any difference one way or another on whether it's going to be a good loan, but it puts them in a different algorithm.
Right.
So what it looks like on a dealer side, for those of you that are listening and may be confused, because this is all a little confusing, is that as a dealer, first of all, there is a method to collecting information from customers. And the easiest way to do that these days, most people believe, is online, because it means you don't have a person talking to you. So you can stop, you can rethink, you're not as nervous. But if you open that credit app and it's one huge long page of questions, then it's going to look daunting and you're not going to want to do it.
Yeah.
So we're trying to strike a balance.
So we ask as little questions as we can to get that credit app turned in. Because sometimes they'll just say, okay, how about this amount? And we're like, woohoo! But then sometimes they'll start asking questions. And it even goes down to when on our credit app on our website, we have it broken down into like 5 or 6 different slides. Because if you saw this huge thing of 40 questions, you're not going to want to do this. It's going to be like, ugh.
It's like intake paperwork at the doctor's office. How many pages?
Sign the front and the back, 3 pages, and then go to the third one and initial 7 times. So what we do is we'll have you fill out your name, your address, who's applying, basic stuff. And then you hit next and you go to the next page. And then it brings another slide up and you answer a few questions about your employment. Then the next slide up and it talks about where you live. And then the next slide up, how much do you want to put down? Do you have a unit in mind? We'll be in touch. So it's pretty basic. But some people are like, why do I have to go through 5, 6 different slides? It's just a mental thing. So it doesn't feel overwhelming. But then all of a sudden you feel like you've kind of made it through the gauntlet and this guy calls you up and says, I need pay stubs for the last 2 years and your tax returns from, 2022.
It feels like but wait, there's more, but not the good kind.
So I know often as a dealer, we feel like the bad guy here.
Yes.
Because we are pushing for info and then we have to go back and ask again. But that is not something that we do after we get their information, which I think is maybe the customer's perception, right?
Right. And we as banks feel like we're doing a service to the customer of give us just a little bit of information. Let us run the numbers. And then we can tell the dealer how much you can afford. Because you don't know. I mean, I don't know. Can I afford 50,000, 100,000, 20,000? I don't know. So that way, at least when you're in the dealership, you're going to be shown the units that you can afford. Because the worst thing you can do is say, I like that one over there, and then find out you can only afford this one over here.
Right.
So if the bank can get a little information and give you an idea, we're just trying to protect everyone and not let you get in over your head. It helps you as a dealership to be able to get them in the right unit.
Well, that would be great, but we don't do credit checks before they go out and look at units. So we don't know. I know some dealerships do, and there are people that get offended by that because they don't want to jump through the hoops. They just want to look at RVs. So there's really 2 different ways to do this.
Right.
Should we do a choose your own adventure when they come in the door? I mean, I don't know. Maybe this is a thing we should explore.
Maybe if you want this, go to chapter 10.
There you go.
But that does bring up a point. We need to show them what they can afford. And very often, we don't know if they have a 500 credit score or if they have an 800 credit score.
Because everyone looks the same. You can't tell. You can't tell.
Yeah, it doesn't get tattooed on your forehead, does it?
No.
We don't have ID tags on our arms to say, I can get good financing.
Yes.
Right.
So that being said, I know the rage now is what they call soft pulls. Because when you see something on a website that says, won't affect your credit. Yeah, check, what do they say? Get pre-qualified.
Right.
Yeah.
Right.
And won't affect your credit. What does that mean? Because they're still collecting information.
Right.
And they call it a soft pull on your credit. What? Is that really real? Does it really not
Teri,
affect
fix this
your
for us.
credit?
It's really real. When it comes to a bank, any information you give us is not a soft pull. Now, if you are there's some industries, like if you're doing insurance, you're trying to see if you can get insurance on your RV. That's usually a soft pull because you haven't signed, you've signed an application, but you haven't signed anything. You haven't decided.
There's no commitment.
Yeah, there's not a commitment.
Right.
And they're not getting all of the information. They're pretty much getting your date of birth, name, address, and
probably your social.
And
you got to have your social.
Yeah, and your social.
So can the bank see a soft pull?
We cannot always see a soft pull.
Okay.
Insurance companies, we can. And we started doing that probably 8 or 10 years ago, just to try to see what's going on in the back. But a lot of soft pulls, if the doctor's office pulls a soft pull, sometimes they'll do that. The hospital, sometimes we won't see medical. I don't know how dealers can do a soft pull. If you do a soft pull, we probably wouldn't see yours.
So it wouldn't affect your credit rate.
No, a soft pull shouldn't affect. And if you're looking for an RV and you're looking at 3 or 4 or 5 different places, if you do it all within 7 days, it's not going to affect. It's going to be like one big pull. It's not going to say, oh, well, you looked at 7 things.
So the cutoff time is 7 days.
Mm-hmm.
I didn't know that. So
but you also
if you're going to shop, then get to it.
That's right. That's right.
But you've got to figure, if you're going to buy a truck and an RV, you're going to have your truck pulls, like all the places all the banks they've sent it to.
They'll send it to like 10 places.
They could send it to 20 places. Yeah.
Yeah.
And
they do, some of them.
And then if you, the next week or in 2 weeks or in a month, you go to an RV dealership, now you have 7 more pulls. Now you could have as many as 30 pulls.
Ooh.
That'll knock down your credit. Now, not a big issue because we can tell what happened.
Right.
You bought a truck, now you're buying an RV. We can tell. It will knock down your credit. So it's almost
But then
better.
you ask the other uncomfortable questions
Right.
and find out about the person.
Right. And then the bank can, we can justify, okay. And on the banking side, we will put notes in there that, okay, we can see who's pulled your credit. So we'll say, 12 of those were for the car he just bought, but he traded in a car. So he does have this new car payment, but he has the other one that he traded in. So it's a wash.
Right.
So there's a lot of that goes on.
Yeah. So, I guess the moral of the story here is to protect your credit. Soft pulls are generally okay.
Mm-hmm.
It's not a bad thing to kind of see where you're at. It doesn't affect getting a loan. However, you don't want to go in and apply for real credit like every 2 months, every time you get a free day and you want to go see about an RV, because then you are hit over and over and over and over. And the bank will see that, right?
Right.
And that does not look good.
Sure. I couldn't. No recovery from that.
We see that a lot with people with less than stellar credit.
Yeah.
They just keep trying every couple of months. And all it does is make it worse.
Well, and what I would suggest is someone that has, and with us, anything under 720 for your score is a lower score.
Mm-hmm.
I would suggest to someone like that is don't pull your credit. Don't get to that point. Really research it, find what you want, find the dealership you want, and then start there. And I think dealers are very aware and very cognizant of what they're doing when they're pulling their credit.
And people should never be afraid of saying, I only want you to pull my credit once.
Mm-hmm.
Right.
Or I don't want you to pull my credit at all. I want to know what an 800 credit score would be in your estimate. But you can't ask the salesperson, right? Salespeople don't know. The finance guy knows.
Right. The salespeople, they don't have direct phone lines to bank people.
Yeah.
Typically.
The
It's a really small dealership.
But that is the complaint I get all the time from my sales staff. They're saying, well, they asked me what's the rate going to be. I have to answer them. And I'm like, well, I don't know.
Well,
when you ask them how long they're going to live, I mean, they don't, there's things you don't know. How can you answer them?
And in a dealership, you're set up, and I'll say, and I've had dealers across the whole country, is you have experts. You have expert salespeople. You have an expert finance person. That's how I want to make a purchase, that every step of the way I get the expert. Because you might say, well, I bank at Frost Bank. That's where I want my RV to be financed. But you've got a finance person who's an expert. So he knows 20 banks, and he'll say, these 5 banks are your best bet, your best rates, your best, we've got a special loan with them, whatever. Mm-hmm. That would be a full-time job for a salesperson. And the salesperson is now, they take a lot of time learning the product, learning, the pros and cons, knowing, so that they can really pick the right one for you. Same with finance.
Will you do a commercial for me? Because we really need that to play like at the front door.
Yeah.
Find the expert that can answer your specific question.
Right.
Because they're all in the building somewhere.
Yeah. And then put my picture up, not this guy.
and if you push the salesperson, well, just give me an idea. Well, I don't know. It can be anywhere from 6 to 18%. There's no way for them to know.
And then how helpful is that?
It's not helpful.
Is someone going to make a
all.
decision on this?
Yeah. Yeah.
I don't not want my salesperson finding a loan, nor do I want the finance person showing me trailers.
Yeah,
Right.
There's another thing,
Right.
because salespeople sometimes they're good at sales, but they're also maybe good at buying things. So I've known a few.
I don't know. It's interesting. Okay. Well, we're now to the interest rate part of the program. So
Here's
big
the good
change.
part.
Is this the good
Here's
part?
the good part.
Okay. Now I would like to back up just a hair. We didn't really say what you did at your bank.
Oh.
And the last bank you were with was Bank of America.
Bank of America.
So hope they're not after me for this.
Oh.
So
No, yeah. When I was at Bank of America, I was the national manager for the RV division. So I did North America. So I had dealers all across the country, which was very eye-opening. I'd always been a rep in Texas. I've been a rep in a couple of other states. But then seeing how different it really is all across the country, and where you have dealers that are really specialized, like here, you don't have a lot of dealers that really specialize in, I mean, it's such a specialty RV. So you really have to be on your game to do that. And you're pulling customers from all over the country. And we know as banks which dealers, I mean, it would be odd for the Honda store down the street to get a lot of customers from California. Then as a bank, we'd be like, that's weird.
what's happening here?
But here we know you get customers from all across the country.
Right.
And that's why that's why we have it set up where dealers and banks have a relationship and you're my customer. So now we know we can trust you. We know if you're a dealer that's signed with a national bank, you know that dealer's strong because the bank has a lot of criteria who can be there. Not just everyone can't be your dealer. So it's dealers that really have their ducks in a row. So as a customer, you can really feel like if a dealer's given you, well, you got these 3 banks and they're all national banks, you kind of, to me, you feel a little bit more comfortable. Well, this dealer's well respected.
Well, we had to apply to be your
Right.
customer.
Right.
Just like the customers are applying to us.
Right.
Did
We
they
had
ask
to
us
apply to you.
uncomfortable questions at all?
Oh, man. Whoa. I mean, you pretty much
Yeah.
get undressed right
Hey.
there. It is. I mean, am I kidding? It is.
No,
it is
Note to
very.
self, don't become a dealer.
I just finished an audit for one of our flooring banks today. I hope I finished it. He came back to me 3 times with more questions and more data that he wanted. And I think I finally, well, I don't know. He could come back and say, now I want to see this, this, and this. But we are constantly as a dealership having to provide information so that you can run all the numbers and be sure that we're doing our job well.
Well, the bank wants
But-
to know that we're healthy.
Yes, absolutely. And that we're paying them appropriately
Right.
and that
Right.
all the money is transferring appropriately. So, yeah, I get it, but, it's still uncomfortable for an RV buyer. And the next thing is, we've done a lot of podcasts about how do I know when I'm getting a good trailer? And the next question is, how do I know if I'm getting a good loan? Because interest rates feel arbitrary to customers. We have seen such a huge difference between what we could get for a customer 2 years ago and what we can get for a customer now. Can we back up to the beginning? And that's why I wanted people to know that you not only have done this a long time, but you actually helped set the rates for the
Right.
bank and set the programs for what they would accept. So where does that interest rate start?
That's a good question. And that's not.
Ooh, I got three good questions.
Okay, that's not my favorite question.
Okay, so you're on base. That wasn't a home run.
Yeah, right. Okay. Well, the Rangers are winning, so it's okay.
It's an age-old question of how do rates get set and how do mortgage rates why are they different than RV and they're different than auto? And it kind of starts with the Federal Reserve. People know, Jerome Powell. We know that he's the chairman of the Federal Reserve, but does he make all the rules? How does that really work? And what happens with the Federal Reserve, I'll be as brief as I can.
Yeah, give me the small government class
No,
here.
I want the name of every person pushing pencils.
So we can talk to them about our interest rate, right? We can complain.
I'd like to draw, just a nice little chart, how everyone's connected.
A Federal Reserve tree.
Yeah.
So the function of the Federal Reserve really is to protect consumers. I mean, it's a consumer-based.
Hard to imagine.
Yeah, it's very consumer-based. So what they do is you have a chairman, and that's Mr. Powell. He is chosen by the president, and then he has to be approved by the Senate. So he's kind of the top of the Federal Reserve. Then you have a committee that's a kind of a governance committee, just different people that he can choose. If you're on the committee, you're there for 12 years. If you're the chairman, you're there for 4 years. So every 4 years, you'll change. Then you have 12 banks of the Federal Reserve. And these are banks that are run by the Federal Reserve. They're in different places in the country. We've got one in Dallas. And what they're doing is they are taking every piece of data you can think of. I mean, if there's data that can be put in black and white, they're taking it. Then they compare themselves with the whole country. So you've got 12 banks around the country, and that's what Mr. Powell will look at. He'll say, okay, where are we struggling? Where does it look like? We know Texas is pretty stable. No really big highs and good times, no really big lows and low times. So
these are 12 specific banks.
Right.
It isn't like all of Bank of America. It's like a branch in Dallas.
Right. The
bank is one of the Federal Reserve banks.
The Federal Reserve Bank of Dallas is what it's called.
Okay.
And they're a regular working bank, but they're owned by the government. And then that kind of gives us an idea of, well, we see it starting in California. Usually it'll go across the country. So if they see something happening in California, they want to get ahead of it. So 8 times a year they meet, and then they talk about what have we seen in the last couple of months.
So it's a way to keep a finger on the pulse all around the nation,
right?
Comparatively.
And oddly enough, they are meeting today.
Yes, they're meeting. And it doesn't, sometimes we're in Texas and we're like, well, that doesn't seem fair. We're doing fine. Our economy's good. Why are they? But we're kind of eating it up for the whole country. I mean, they have to set one reserve. So they meet 8 times a year. They can meet more. They can meet less. I don't know why they would ever meet less, but so that starts it. And then we look at, did the prime rate go up? Did it go down? Then banks will do the same thing. Okay, well, we're wanting to slow down the business a little bit. We'll raise our rates a little bit. Or sometimes banks can go through times where they're seeing a lot of delinquencies. And I mean, a bank's just like any other business. We answer to our shareholders. So we want to make sure, if we start taking losses, we have to answer to our shareholders. So we look at the Federal Reserve. There's also other federal agencies that look at banks to see where we can go. And banks try to be the most competitive they can be. And it's interesting because it's almost like a gentleman's agreement with all the banks. You won't see one bank with just stupid low rates and one bank with stupid high rates. Someone will be the best always, but you're going to see banks always pretty close to each other. And
it's not like gas stations where there's price gouging and price wars and all that.
Yeah. No.
Well, I don't know. It's kind of like that, but a little nicer.
Yeah. But you also can look at sometimes it's not under the bank's control or the dealer's control, where sometimes there's a metal shortage, or there could be a compressor shortage, or there could be an air conditioning shortage. Now suddenly it's hard for you to get the units, so the units are priced higher. Mm-hmm. So then the bank's thinking, well, last year it was 60,000, this year it's 85,000. Well, that seems like it's a huge jump. We're going to bump our rate a little bit higher so that we know we've got the cushion in case we have that extra bit of risk.
Right.
Because if the market's not stable with the RV pricing, right, like it hasn't been for a few years, then there is more risk for the bank because they aren't worth as much, or they're worth a different amount, or people can't trade it in, right, or it just feels like an uncertainty, yes, more than anything.
Yeah, there's a lot of uncertainty to it. Right.
Money is emotional. And I mean, we lived through now going on 3 years of high, exhausting, anxiety-inducing, emotional
Right.
events.
Right.
So, okay. Yeah.
So if the Federal Reserve decides to raise the interest rate a quarter point, if they raise prime to be they raise it a quarter, then the banks don't necessarily have to raise everything they do a quarter. They could stay the same, or they could adjust depending on what they think. Because, I mean, the Federal Reserve raises and lowers the interest rate to manage the economy.
Right.
And then the bank raises and lowers to manage how many loans they're giving.
Right.
Now, real briefly, I realize we're in the weeds. We've probably lost most of the audience by now. It was nice. It was nice knowing you guys.
They are totally with us. They're sleeping.
they're resting comfortably.
Sleep is good for them. They are enjoying it. We're doing a great service.
I think so.
Hopefully they're not driving. But
I think it's really informative. But so I was surprised when I realized that banks have to control how much money they have out on loan.
Right.
So they're regulated by the government, basically.
Right.
As to how much percentage they can loan out based on how much cash they have in certain reserves.
Right.
Right?
Yeah, I didn't know you were going to bring that up. That's kind of personal. Now the customer's like, why are you asking me that question?
Well, because, why do rates change? I mean, we have some banks where I can get an approval and then I have to turn it back in for another approval and it jumps 2%. And that's I know the Federal Reserve didn't change.
Right.
And they say, we need to slow down our loans because our portfolio we got too many loans too fast.
Right.
We misjudged and now we need to get less loans. And I'm like, well, that's one way to do it.
And that's hard. That's hard when you are the bank and you see that it's getting a lot of times, especially during COVID, it was just such a burst of units, is we had a lot of used. So you want to have more new than used, but you want to have used because it's still used RVs is a fantastic product.
It's a great market.
You pull in great customers. It's great for the bank, but there's so many things. And you would think, they raised the rate, the prime rate went up. Well, now the bank rates are going to go up. Not necessarily. It's
okay. Good to know.
They're not, it's an indicator. If we're lowering, and then the Federal Reserve's raising and raising, okay, do we know what we're doing? But it's not necessarily that you would raise
right away. But if they keep raising it, chances are banks are going to raise it too.
Yeah.
I mean, they have to adjust.
Yeah. And also it's, you look at our competition too, and pretty much we all will raise and lower at the same time. But it's hard as a customer that I wanted to go to this bank where I went last time. Well, this bank will do it for 100 basis points less. Well, that you don't really understand. Well, how? They're just banks. It's just money is money, but it's just what are they trying to
do? They want more loans or less loans? Mm-hmm. So they'll adjust a little bit
and
because
banks
of that.
don't just answer to themselves internally.
Right.
You answer to the feds.
Yes. The feds and the shareholders. Both.
Yeah, absolutely.
So there is a lot of business management that goes on with interest rates. And interest rates is how you control that.
Yeah.
As how you get more loans or less loans.
Generally, we want to loan as much as possible. However, we also want to stay in good standing. So we're going to have to slow it down. Go the rates just slightly.
And when you asked me earlier something about how do you know if it's a bank that you want to use? How do you pick which bank it is? And that's tricky because banks are all covered by, the banks are all stable banks, even credit unions. If you want to use a bank, if you want to use a credit union, the differences are credit unions are regulated a little differently than banks. You can do more things at a credit union because you're not being watched as closely. Not to say that they're doing anything crazy. It's just, maybe it's the customer that doesn't have any money to put down, or maybe it's a customer that wants to take it, and put it at his lake house and live in it. Banks, when you're doing a loan on an RV with a bank, it's an RV, it's a specialty loan. It's for personal use. It's for driving around in. Credit unions will let you live in it. And a lot of times people say, well, we're going to stay there on the weekends, or we're going to take it to our lake house and we're going to use it that way. It's just the bank does not want you to be living in it because we can't foreclose it because we don't have a mortgage loan with it.
Right.
So if and that's why a lot of times dealers will really push you. If you say, well, we're building a house, so we're going to put it on the land while we build the house. Okay, well, that's not necessarily living in it because you're going to build a house.
You have a plan.
We don't want you to say, we have this land, we're going to live in it for 10 or 15 years and then build a house.
Yeah, I've definitely heard the conversation of, while you're talking to anyone here at the dealership or with a bank or credit union or whatever, maybe not credit, we don't really need to know to the greatest detail what your plans are. If you plan on spending a significant amount of time, let's put it that way, versus putting it in, I'm going to be living in it. Don't tell us how much time in a 24-hour period you're going to be spending on a daily basis in this thing.
But there again, we try to be honest with the banks.
Of course.
But what do you do? I mean, most banks have in their regulations that they will not fund full-timers.
Mm-hmm.
Why?
It's because
you can't repo it.
Right. It's not a mortgage loan. So we
cannot. It can just roll to another location, not be found.
Yeah. And we
well, there you go.
Legally, we can't foreclose it. No matter how far past due you are, no matter if I know it's right there in front of me, I can't because that's your home. And it's not a mortgage
So why
loan.
would a bank want to put themselves in that situation? If they're in the business of also protecting themselves, their shareholders and what have you.
Mm-hmm.
So why would a bank want to put themselves in that situation?
Right.
Well,
and
so what do customers do that want to live in it? Because that is pretty common.
Well, and that's where you go to credit unions who are not regulated. And so credit unions can finance full-timers.
Because they can foreclose.
Right. Because they can foreclose because they're not being regulated as heavily.
Interesting.
It's
I
frustrating.
never knew that.
Let me call my wife real quick. I got plans.
A lot of credit unions still won't.
Right.
However, there are some banks that specialize in that.
Right.
And they are visible sometimes and then hard to find others. So I don't know that it has worked so well for them, but it is out there. That is a tough problem.
It's tough. It's
Very
a tough
tough problem.
Yeah. And even just people that are buying motorhomes that want to live in their motorhome and just travel full time.
Sure.
There's banks that specialize in that, but it is
Right.
a mortgage. It's a mortgage type loan, not.
Yeah, it's different than a standard bank financing at the dealership usually.
Right.
Yeah. Okay. Well, gosh, what have we not covered here? I think we've talked about so many different parts of banking and financing. Even, I mean, I've been doing this for a very long time, maybe not 40 years, but a long time. And I've learned a lot.
I think if we really want to do a good service to our listeners, we should prepare them for these situations. So everyone who's listening, we're about to ask about 15, 20 minutes of very personal questions. And wherever you are, answer out loud. I don't care who's around.
And you know what I would say that
We're going to practice being uncomfortable. Is that what you're saying?
That way, when you roll into an RV dealership in the finance office and all that, you're set.
You are well rehearsed.
Your nerves are shot already.
I think the biggest the question I get asked the most of the times is from salespeople saying, how do I answer them when they ask me what my rate's going to be? Is I would just, because I like to sell myself, is say, I'm an expert in sales. I can tell you everything you need to know about these RVs. I can tell you, I can get you exactly what you want. He can tell you exactly the back end part of it. But don't be like, I don't know, maybe 7, maybe 10, maybe 15. Just say, I know what I'm an expert in, and that's knowing these units.
Right. And don't set yourself up with a false number or something that's going to come back around. Well, you said.
Yes, because it's going to come back around.
It does too easily.
Yeah.
Well, so what suggestions would you have, Teri, if somebody is going to buy an RV, they're going to finance, what is going to put them in the best position? What would you instruct someone brand new to this to do?
Getting them ready for finance.
Mm-hmm.
I would say everyone that's buying an RV is expecting you to ask for a down payment. I might not tell you that I'm expecting it, but I've got some money set aside just in case. Is I would start off with, okay, it's a specialty unit, so they're going to ask for 10% down. Just lead with that and just keep going. And then they've got a little bit of time to think, okay, well, 60,000, okay, 6,000. They've got to. That'll help them know kind of what level they want to be at.
So if you're a buyer, you need to be thinking 10% down.
Yeah. Now you might be able to have the option of putting more money down. I would say,
Or putting less money down. Or putting zero down.
Right, or putting zero down. But just know, too, you're going to probably finance for 10 years or 15 or 20 years. Can you just put a little cash in there?
It's a nice little way of just doing a quick little self-assessment, going in, if I needed to, 10% down of this would be such and such amount. If I walk in, then I have an idea ballpark of what is reasonable across the products on the lot to look at.
And everybody checks their credit score these days. I mean, it's like everywhere. Sometimes it's on the back of your credit card statements. I mean, you can find it all kinds of places. So if you have an idea of what your credit score is, what's a good credit score, Bank of America that you are associated with is, I don't know. I don't know what they call them, an A+ bank, a tier rated bank.
I've heard of them.
You want A+ paper. You want good credit scores.
Right. So if you're going to any national bank, which would be like Bank of the West, U.S. Bank, Huntington Bank, Fifth Third, they're going to want money down, and they're going to push you for 10% down at the beginning. If you say, well, gosh, that's $6,000, I've got $4,000. Okay. Well, I mean, that makes some sense for us. It depends too on, if you've got a trade in. There's a lot of other things that figure into it. But if you can just not make a big deal about it. I know it's hard when you're like, I'm going to need, how much money can you put down?
Yeah.
If you just say, okay, you're going to need 10%. So let's just look.
But so many of our customers, they do their application and they say, I just want to see what it's like if I put nothing down.
Yeah.
But then they say, oh, that rate's too high.
Right.
And we're like, well
you
put something down.
You didn't put the right information in to get the right.
That might help you.
Yeah.
Yeah. So, okay. But what's a good credit score? What's a credit score that they could go, oh, no problem.
Okay. If it's below 720, it's going to be tougher to get them financed. And 720 is a pretty high score. I mean, 10 years ago, very few people, but now they've kind of changed the way they score. So
I've heard the scores have changed. Yeah.
So if it's under 720, that doesn't mean you're not going to get financed. It just means you're either going to need to put more money down, or you're going to have to pay a little bit higher rate. You might not get as long a term as you're wanting. And you would think, well, but a shorter term gives me a higher payment, so that doesn't make sense. But it's all going back to the risk of shorter cycle.
Right.
So,
and a lot of people come in and say, I want to pay $300 a month or less. And you're like, okay, well then how much money are you going to put down? And they're like, well, maybe 1,000. And you're like, all right, well, that's really limiting. Yeah. And it's very difficult to say, oh yeah, I gotcha. I can get you in this one.
Right.
I mean, we can guess, we can get a little closer, but we can't, we don't know their credit score. We don't know the rates. Rates that we see here on what we call second chance lenders that are below 720.
Right.
They go in Texas all the way up to 17.9%.
Right.
I believe in Texas you can't go over 17.9.
Yeah.
You can't go over 18.
Yeah.
Yeah. There's a law in Texas, but there is not a law everywhere.
Right.
Some places will charge 19.9.
Yeah.
And credit cards are 23 all day long these days.
Sure.
Well, and I was going to say too, if you're looking at the big picture of we can buy this trailer, we can go camping on the weekends. You do say, oh gosh, 16%, that's ridiculous. But you're not going to pay for hotels. You're not going to pay, you're going to get the enjoyment. You're going to get memories for your kids. So you think it's a lot high amount, but divide it out by how many times you're going to use it a year, or just.
And even if it's, and that's the thing, quality time it really is priceless. The relational part, the experience part, the memories, what you do with your life, being unplugged away from things.
Yeah. But you want to be smart with your money, and you can always.
No, I don't. Stop.
Yes. So you can always refinance in 2 years, right?
Well, plus sometimes I want to say, okay, you went to Disney for 6 days. You could have paid a year's worth of RV payments.
Yeah.
For what you took, and then you can go and especially here in Texas, we've got places within an hour, 2, 3 hours that are just amazing.
Sure.
And so you could have a whole year's worth of weekends or,
adventures.
holidays.
Yeah,
That's right.
absolutely.
So
absolutely.
I would never get hung up on, I'm not going to pay 10%. I'm not going to pay 15% on your interest rate, because if you look at it for the amount of time you're going to use compared to a hotel, no one says, I'm not going to pay $300 for a hotel room. They just do it because, that's just what it is.
Yeah.
Right.
And something else about RV loans, that there is no prepayment penalties on almost any bank. Now, I think we have one bank that may have $200 if you pay it in the first few years. But for the most part, you can pay whatever amount you want every month, and you can pay it off anytime you want and not pay any more interest. I mean, all of that. So there are adjustments you can make there. That's probably a whole nother podcast, is managing percentage rates. But I
You hear that? I think that's an invite to come back.
But if you do have a credit score that's lower than 720, I wouldn't discourage you from applying.
I wouldn't either.
Yeah, because there are banks who will loan that. You will pay a higher percentage rate, and they absolutely will require 10% down.
Right.
Now,
Just know that.
If you've got 10% down, you most likely can get a loan. Now, at what point is your credit score unbankable?
For RVs, I would say anything that's under 650 is
really tough.
It's tough, and it's tough for the bank, not trying to be your parent, but if you're struggling with the bills that you have now, it's not the time for you to get an RV.
Right.
It's really just not the time. Now, it could be that you had a blip. Maybe you had heart surgery, so you have 6 months of bad credit. The rest of your the rest of your credit history is good, but it's hitting your score.
So it could be a timing thing.
Yeah.
Yeah.
Like
I just had heart surgery.
Right.
I feel like I need to get on with my bucket list.
Right.
Well, yeah, but maybe not with an RV for 6 months.
Right.
Get on with that bucket list. Do the things that don't require an RV.
Right. Right. Get yourself another 6 to 12 months of good credit, and then come back and.
Now, I have heard, this is a little off topic, but I have heard that medical charges don't count as much when banks look at it. Is that true?
Yes and no.
Okay.
Yes and
all right.
no.
Well, that's the answer then.
Okay. A national bank, one of the big banks, because there's such a volume going through that they're just looking at different things. So with a national bank, yes, it's still going to matter. If you go to a regional bank or you go to a credit union, they're going to be more able to work with you because it's still a little bit more relationship based.
Okay.
So you're not going to run through the computer and spit out the other side before somebody looks at it. Right. Somebody might look at it and say, yeah, obviously there was an issue here, but everything else is perfect. Right. So,
and honestly, what we're looking at mostly is mortgage and auto. I mean, we're looking at those two things. Okay, or you're handling those, your credit cards you're handling, but you've got medical. Well, now child support is a different thing. If you have child support that's past due, you're not going to get a specialty loan.
Yeah.
You're just not. I mean, fair or not fair, it's a little bit lower than medical. And even if you have a national bank and you say there's some medical on there and it's $2,000 or $3,000, maybe it's not that big a deal to the bank, but your finance manager is going to have to call them back and say, look, their kid had this happen. You know, they kept everything up. And sometimes you have to get a pair of eyes to look at the loan and not just a computer, because most or a lot of our loans, because customers' credits are so strong, they just automatically approve with a computer. No one's looked at it. On the reverse side, some of them get turned down that nobody's looked at. And if you've got a good explanation, then, I mean, I would always try.
Sure.
Yeah. So if somebody's looking for a loan for you at a dealership, be sure to tell them your story if you've got something that's a little odd. You know, also, banks don't like to fund 2 RVs. They only like to fund one.
Right. And the general rule is one of each side. If you have a motorhome and you have an RPod, well, that's 2 very different kinds of camping. You might be able to do that. It's just kind of hard. We don't want as a bank, again, acting as your parent, we don't want you to get too overwhelmed. And a lot of times we'll just have the finance manager say, well, what is the bulk of what they're doing? I mean, do they even really need this? And I mean, maybe they do, maybe they don't. What we're afraid of is that I'm going to buy an RV, but then my son, who has kind of bad credit, wants to go with us too. So we're going to buy another one. He can't get credit because his credit's bad. We'll just pay for both of them and he can come with us. Well, banks don't want that. We want to know that you're buying the RV, you're going to be the person using that RV.
Mm-hmm. Wow. Well, that's all a lot of information. If somebody's looking for a loan or ever wanted to know all the crazy that goes along with banking and getting an RV loan, I mean, we've covered a lot. Good. I don't think we've missed much of it.
Good.
Wow.
Hold on, let me see. Caitlin, did you learn anything? Do you know things?
She grew up with
things?
She already knew her mom was super smart.
And so pretty.
Oh, yes, and so pretty. She looks like me, right?
Yeah, we're twins.
That's what everyone says. Yeah. We're twins.
Everyone says it. It's crazy.
Yep. Well, gosh, I think this was awesome. Thank you so much for making the trip to talk to us.
I love it. And you know what I would love to do? I'm inviting myself, but
okay.
When you have
on air, you're inviting yourself. You know that, right?
Bold, very bold.
Yes.
I love a
just
live
like
audience. Me. Love it. So when you have your rallies, I would love to come. We used to do this a lot in the Valley. Is on Saturday mornings we would go to just different RV parks, and because people have questions, and I only know to answer what I think your question might be. So I would love to come to a rally and just do a breakfast and everyone just asks me all the questions. There's a lot of questions you don't want to ask the finance person because then they're going to know that this was kind of in my mind. Or, I mean, people have a lot of grandparents and grandkids, and meshing that all together, how does that work? You don't necessarily want to ask your finance manager, but you'd like to have a contact that you could say, hey.
Okay, so can we sign you up for two things? Because I think, Clint, what we ought to do is have a seminar at the rally, which would be awesome. In fact, maybe I'll invite you to stay with me in my barefoot trailer.
Ooh, how fancy.
Oh, I don't know. Maybe, I've got a few options here. Okay. We'll find something spectacular. That would be super fun. We've talked about it before. We've never made it happen. Let's make it happen in the spring. And side note, our rally this spring, it is in Bandera, Texas. Anybody can come. We call it the Texas Tiny Trailer Rally, but honestly, we've had motorhomes there. Anybody can come.
We've had non-RV owners.
Yes. People just like to show up and join us.
Yeah.
We're there 4 days, all kinds of seminars, all kinds of talks, fire pits, dances, barbecue. I mean, it's a super fun time, and it is right after the solar eclipse. So there is...
Bandera is where it is a total solar eclipse.
It is a total eclipse. There is a 3-day package, I think, you can buy from the park. They've saved a few more for our rally goers only. There's no place else you can camp now. But if you need a space, if you come to our rally and you sign up for it, you can get 3 days of camping in Bandera at Skyline Ranch.
Leading up to it. So
leading up right before the rally.
I want to say that the eclipse is like 2 days, one or 2 days before the rally officially starts.
Right.
But ralliers will be there pre-camping.
Yes.
Pre-rallying.
And I hope I'm pre-rallying with them. Yeah. But at any rate, go to TexasTinyTrailerRally.com.
Yeah.
All right. Got that? Check it out. We should have Teri there to talk about banking, financing, refinancing, trade-in amounts.
And Caitlin.
And Caitlin, will, of course, will be there. She helps run the rally.
Teri will talk about Caitlin.
We can talk about Caitlin.
Yeah.
I'll tell some
we can talk about Caitlin right now, but we'll do that another time.
We'll talk about awkward questions, and then we'll talk about awkwardness.
all the things.
Yeah.
But I think we also ought to do like a happy hour here. We haven't done a happy hour since before COVID. And just invite the community to stop in and talk to the bank specialist.
Yeah.
You know, it's always good to have people here. We like to have evening events here at Princess Craft and just, everything from maintenance to traveling ideas to first aid to banking. Yep. I think that would be spectacular.
Yeah,
so
that would be fun.
We will sign you up for all the things, Teri.
All the things.
All the things.
I love Princess Craft, so I'm in.
Awesome.
Well, everyone, that's it. And Teri, we can't thank you enough. This has been excellent. You were wondering if we were going to find a way to keep this thing going.
Yeah.
Really? You were wondering?
Yeah.
Between your mouth and my mouth? Come on,
easy.
Sweetie.
That was
You know better
easy.
than
That
that.
was easy.
So, Caitlin, thank you for letting your mom come over to play.
Thank you for having her.
Yeah. And everyone, thank you for listening. You can find show notes at rvsmalltalk.com. You can find us on social media at RV Small Talk Podcast. Just look us up. We are there. Look up the Texas Tiny Trailer Rally. It is in the spring. We will also have a Texas Truck Camper Rally. TexasTruckCamperRally.com for the truck campers. TexasTinyTrailerRally.com for the trailers. And guess what? If you don't have a truck camper or trailer, you just like rallying for some reason. Come on to either of them. Come on to both of them. We don't care. Join us. That's it. PJ, anything else?
Not much else. The only other thing I want to say, I don't usually promote Princess Craft, but we have a handful of 2022s left, and we had a little bit of a hailstorm. We're fixing
It
everything.
was not a little hailstorm.
We had a big ass hailstorm. Okay.
Yeah. There you go. That's the technical term.
We are fixing everything, but we are also discounting it. So you're getting a great trailer, a full warranty. We just have some super deals.
Yep.
So if anybody out there right now
If you think dimples are cute,
is listening to this and would like a screaming deal, just give us a call.
princesscraft.com.
We have some deals. We're still sorting through it all, but
Yep.
wow. Even makes me want to buy one. And I already own them. So it's that good of a deal on some of them.
All right, everybody. Thank you so much for joining us for this episode. And we will see you next time with another episode of the RV Small Talk Podcast.
Bye.
Bye now.
Thanks for inviting me.
Bye.